Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. We are from Group 4 and we will discuss about the material entitled banking system and services. First of all, I will introduce the members. Wirna Cahyani as the first speaker and Irma Harmin as the second speakers. Okay. Next. There are 8 contents that we will discuss. The first one is history of bank formation. The second one is banking system. The third one is banking in Indonesia. The fourth one is fractional reserve banking system. The fifth one is what they are all about. The sixth one is fractional reserve requirements. The seventh is pros and cons of fractional reserve banking system, and the last one is the term of bank run. Okay, so the first material is history of bank formation. In 5th century, Italia was the center of European trading. Merchants from all over the continent met to trade their goods, but there was one problem: too many currencies in circulation. In Pisa, merchants had to deal with 7 different types of coins and had to exchange their money constantly. These exchange businesses, which commonly took place outdoors benches, is where we get the word bank from the word banca, Italian for bench. Networks of banks spread all over Europe, handing out credits even to the courts or European kings. The next material is talk about banking system. How do banks actually work? The first is people keep their money in banks and receive a small amount of interest. Next, the bank takes their money and lets it out at much higher interest rates. This process is essential for our economic system because it provides resources for people to buy things like houses, or for industries to expand their businesses and grow. Sources of income for banks include accepting saving deposit, the credit card business, buying and selling currencies, custodian business, and cash management services. Next is we will talk about bank in Indonesia. There are 3 types of bank by function. The first one is central banks. The bank responsible for domestic monetary policy to maintain price stability and the value of the country's currency. The central bank also has responsibility for regulating and supervising other banks in order to limit the risks and cost of a system crisis. The central bank is Bank Indonesia. The second one is commercial banks that carry out business activities conventionally and or based on Sharia principle, which in their activities provide services in payment traffic. The example is Bank BRI. Rural banks. Banks that carry out business activities conventionally or based on Sharia principle, which in their activities do not provide services in payment traffic. Okay. Next, there are 2 types banks based on their operation. There are conventional banks and Sharia banks. Conventional banks that carry out conventional business activities using the pricing method according to the interest rate issued by Bank Indonesia. Example, Bank Mandiri, Bank BRI, and many more. Meanwhile, Sharia banks that carry out business activities implementing Sharia principle in the Islamic religion. For example, the Indonesian Islamic Bank and others. Next, there are 3 types of bank based on ownership. The first one is government banks that are wholly or most of the ownership owned by the government and are usually referred to as BUMN banks, state-owned enterprises. Example like Bank Mandiri, BRI, and others. In addition to central government, local governments can also have local government banks. Example, Bank Jatim and others. The second one is national private banks. Banks that are mostly owned by private parties or entrepreneurs from Indonesia. Examples such as BCA, Maspion banks, and many more. The next one is foreign bank. A bank whose ownership is held by a foreign party and has branches in a country others than the country of origin. Example of foreign bank in Indonesia are Bank of America and others. Okay, the last one is joint venture banks. Bank established by legal entities in Indonesia and legal entities abroad. This bank is also known as a joint venture bank. An example is Bank Cip Niaga. Next, there are two types of bank by status. The first one is foreign exchange banks. Banks that can carry out foreign transactions and other activities related to foreign currencies. Usually, foreign exchange banks have superior products such as foreign exchange or foreign currency saving. Example of foreign exchange bank include BRI, Bank Ganesha, and others. And the last one is non-foreign exchange banks. Banks that can carry out foreign transactions in a limited area only in certain countries. Example of non-foreign exchange banks are Bank Yuda Bakti and others. Okay, the next slide will be presented by Irma Hanin. Times is yours.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Thank you for the chance, Wirna Cahyani. I will continue my material, which is fractional reserve banking system. So, fractional reserve banking system, or in Indonesia we said cadangan perbankan, is a system in which only a fraction of bank deposits are backed by actual cash on hand and available for withdrawal. This is done to theoretically expand the economy by freeing capital for lending. So the fractional banking system came into place as a solution to problems encountered during the Great Depression. It happened around 1929. It began after the stock market crash of October in 1929, which sent Wall Street into a panic and wiped out millions of investors. Over the next several years, consumer spending and investment dropped, causing steep declines in industrial output and employment as failing companies laid off workers. So what they are all about. Banks are required to keep on hand and available for withdrawal a certain amount of the cash that depositors give them. If someone deposits $100, the bank can lend out the entire amount, nor are banks required to keep the entire amount on hand. Many central banks have historically required banks under the purview to keep 10% of the deposit, referred to as reserves. This requirement is set in the US by the Federal Reserve and is one of the central bank's tools to implement monetary policy. Increasing the reserve requirement takes money out of the economy, while decreasing the reserve requirement puts money into the economy. So when depositors made many withdrawals leading to bank runs, the government introduced the reserve requirements to help protect their depositors' funds from being invested in risky investments. For example, if a person deposits $1,000 in a bank account, the bank cannot lend out all the money. It is not required to keep all the deposits in the bank's cash vault. Instead, banks are required to keep 10% of the deposit. For example, $100,000 as reserves and may lend out the other $900,000. So the Federal Reserve set the reserve requirements as one of the tools for guiding monetary policy. Historically, the required reserve ratio on non-transaction accounts is 0. while the requirement on transaction deposits, for example, checking accounts, is 10%. Following recent efforts to stimulate economic growth, however, the Fed has reduced the reserve requirements to zero for transaction accounts as well. Next. Well, we have due fractional reserve requirements. So it would be depository institution must report their transaction accounts, time and saving deposits, full cash, and other reservable obligations to the Fed either weekly or quarterly. Some banks are exempt from holding reserves, but all banks are paid a rate of interest on reserve called the interest rate on reserves, or we shorten it into IOR, or the interest rate on excess reserves, or IOER. This rate acts as an incentive for banks to keep excess reserves. So banks with less than $16.3 million in assets are not required to hold reserves. Banks with assets of less than $124.2 million but more than $16.3 million have a 3% reserve requirement. And those banks with more than $124.2 million in assets have a 10% requirement. So with all this fractional reserve banking system, it sure has its pros and cons. So it permits banks to use funds, the bulk of deposits, that would be otherwise unused to generate returns in the form of interest rates on loans, and to make more money available to grow the economy. It also, however, could catch a bank short in the self-perpetuating panic of a bank run. So many US banks were forced to shut down during the Great Depression because too many customers attempted to withdraw assets at the same time. Nevertheless, fractional reserve banking is an accepted business practice that is in use at banks worldwide, including in Indonesia. Next. So with all this being said, it can result a bank run. So a bank run occurs when a large number of customers of a bank or other financial institution withdraw their deposits simultaneously over concern of the bank's solvency. As more people withdraw their funds, the probability of default increases, prompting more people to withdraw their deposits. In extreme cases, the bank's reserve may not be sufficient to cover the withdrawals. So a bank run or run on the bank occurs when many clients withdraw their money from a bank because they believe the bank may cease to function in the near future. In other words, it is when in a fractional reserve banking system, where banks normally only keep a small proportion of their assets as cash, numerous customers withdraw cash from deposit accounts by the financial institution at the same time because they believe that the financial institution is or might become insolvent. They keep the cash or transfer it into other assets such as government bonds, precious metals, or gemstones. When they transfer funds to another institution, it may be characterized as a capital spike. As the bank run progresses, it generates its own momentum. As more people withdraw cash, the likelihood of default increases, triggering further withdrawals. This can destabilize the bank to the point where it runs out of cash and thus faces suddenly bankruptcy. I think that's all for me. Thank you. Back to moderator.
Okay, thank you for Irma Harmin. I think that's all for our group. We are sorry for there's any mistaken words. Assalamualaikum warahmatullahi wabarakatuh.